Welcome back to the Brent Bruce Daily. Today is the first day of June, June 1st, 2023. It is now 4:36 p.m. Central Time. The bond market and mortgage-backed security market is closed for the day. We did have a good day. Home loan interest rates improving again today. It looks like overall the debt ceiling issue is probably behind us. That seems to be getting wrapped up. And now we are focused on tomorrow's employment and jobs number coming out from the Bureau of Labor Statistics. This is the report. This is the culprit that back in February really was a punch to the gut and turned us negative. And we lost, really, it was about a full percent in home loan interest rates. Actually, we'd say home loan interest rates went up about a full percent in about 3 weeks because of that report coming out. So we're going to be watching this very closely because it can do the same thing. It can turn around and push us way down in interest rate very quickly after we get some of these reports that are now coming. Currently, we are sitting here at up 31 basis points on the mortgage-backed security that we watch each day. You can see here that we've had some strong improvements, primarily after the debt ceiling issue started to resolve itself, and as we are now moving into the employment number coming out for Fridays. This has been 1, 2, 3 days of strong gains, breaking through the Fibonacci level, and now really heading towards this big cluster here of technical and overhead ceilings that we have to break through. So the 10-year Treasury down 3, still at about the 3.6. So not a big move here on the 10-year, but a really good day for mortgage-backed securities. Let's see how that equates to home loan interest rates. As we move over to the Brent Bruce Daily here, our very well qualified 30-year fixed conventional home loan with excellent qualification, 800 FICO score. You remember that earlier in the week, we were talking about 7.125. Then it dropped to 6.99, 6.875. And here we are at the end of the day on Thursday at 6.75 with a credit of 443 with the loan store previously, the bank that they had just merged with or actually bought out, Home Point. So 11 Mortgage, also about 6.75 with a little bit of cost. United Wholesale, a little bit more expensive here, costing about $1,000 to stay at that 6.75%. However, getting to that 5.99, as you know, United Wholesale is usually more effective when it comes to buy down points. They're at 1.6 now to get to that 5.99. Now, you remember we were looking at 2.6, 2.7 to get to that 5.99 just 3 or 4 or 5 days ago. So we have seen some strong improvement to mortgage interest rates here in the last few days. Here are the parameters of the scenario that we run each day, just so you see that for compliance purposes. So it's going to be a big day here tomorrow with the Bureau of Labor Statistics employment and jobs numbers. That is what we're going to be paying close attention to. And what we want to see is a poor jobs number. Okay, so if we come out and you hear the news talking about a blockbuster jobs number like they did back in February of this year, that is going to be very bad for home loan interest rates, and we are going to become very familiar with the sevens. Okay, so that is what's going to happen if we have a blockbuster, blowout, strong jobs number tomorrow. Now, if the jobs numbers fall, if they say that it was a disappointing jobs number and the jobs numbers fell heavily, the opposite will happen, because what that's going to do is it's going to show a contraction on the overall economy, which is what the Fed wants, because that also is an indication of a drop in inflation. So overall shrinking and tightening of the economy allows the economy to slow down, and all of a sudden interest rates can start to come down as well as inflation is reduced. That's what we're looking for tomorrow. Make sure that you like, subscribe, share, hit the notification bell up in the corner, and I will talk to you again tomorrow.